Malaysian government securities is a debt instrument issued by the government of the Malaysia to raise a fund for public expenditure and national development. Since the federal government's credit and authority fully endorse these securities, they are seen as a low risk. Financial institutions, pension funds, insurance firms, as well as other institutional investors is the primary participants in the domestic capital market. Market government securities issued in Ringgit Malaysia. They attract to investors who want consistent earning with a minimal risk because they provide set return for a particular time frame.
Next, its features or characteristics of the MGS. So, there are 5, which is medium to long term, fixed rate coupon, bullet repayment of principal, semi-annual component payments, and also issued via competitive auction by Bank Negara Malaysia. So first, MGS are medium to long-term investment with maturity ranging from 3 to 30 years. This makes them ideal for investors seeking stable long-term returns. For the government, MGS provide a way to fund large-scale projects like infrastructure or healthcare without needing to borrow repeatedly. And second one, MGS come with a fixed interest rate, also called a coupon rate. This means the rate stays the same throughout the bond's life, no matter how market condition or monetary policy change. Investors love this because it guarantees predictable income, making financial planning much easier. Next, bullet repayment. When an MGS matures, investors get their entire principal back in one lump sum. This clarity helps investors plan ahead, knowing exactly when and how they will receive at the end of the bond's term. With MGS, interest payments are made twice a year, every 6 months. This semi-annual payout provides investors with a steady cash flow, perfect for those who rely on regular income from their investment like retirees or long-term savers. And lastly, MGS are issued through competitive auction managed by Bank Negara Malaysia. Only approved financial institution can bid directly, and the final interest rate is determined by the lowest yield offered. This ensures a fair, transparent, and efficient process for pricing these securities.
Now is 3.2, which is roles of market participants. So there are 5. One of them is Government of Malaysia, which is also known as issuer. It is established and sells the Malaysian government securities, which is MGS. And the purpose of issuer is to collect funds for national development projects such as building roads, schools, and also public services for our Malaysian. They agree to pay back and will receive the interest. The second one, which is the Bank Negara Malaysia, which is BNM. BNM manage the MGS market. Their purpose is to hold auctions, allowing people to purchase the new MGS. It can control the amount of money coming in and coming out through monetary policy. So the third one is Principal Dealers, which is PDs. PDs help to sell the MGS to investors. So the purpose is to help investors buy or sell their MGS in the secondary market. Fourth is institutional investor, which is the purpose is to buy MGS in large quantities because MGS can have low risk and provide stable returns. And the last one is retail investors, which is individual buyers. So the purpose is to invest their savings through banks or online platforms such as apps.
So next, I will explain how the trading of Malaysian government security or MGS works in both the primary and secondary markets. So this is the illustration of how the trading of the MGS works. Trading of MGS begins in the primary market. In Malaysia, Bank Negara Malaysia or BNM issue MGS on behalf of the government through a competitive action process. Institutional investors such as banks and financial institutions take part in the bidding by offering their acceptable yield rates. Since the auction results are not announced yet, investors can trade this security in the when issued or WI market. WI trading refers to contracts that are traded before the official issuance, based on expected yields. Once the auction is finalized, the securities are settled and delivered. After issuance, MGS can be traded in the secondary market. Most of these transactions take place over the counter or OTC. This means that buyers and sellers negotiate directly, often in large value, typically 5 million ringgit and above. In addition to OTC trades, MGS are also traded on electronic platforms like Bursa Bonds and the Electronic Trading Platform or ETP. This platform promote their transparency and ensure accurate reporting of trades. For retail investors, MGS-related securities are available through Bursa Malaysia under the Exchange Traded Bonds and Sukuk or ETBS platform. This makes it easier for individuals to invest in MGS. MGS prices are typically quoted based on yield, and their price movement are influenced by market sentiment, especially changes in interest rate and the overall economic look.
So, there are 4 benefits to the issuer for selling Malaysian government securities, which is MGS. Firstly, we have stable long-term financing for development and deficit. It provides secure long-term funds for development and deficit financing. It reduces reliance on short-term for foreign borrowing. Initiated in late 1980s to deepen domestic bond markets. Second one is refinance costly external debt and diversifies funding sources. It helps to reduce foreign borrowing and associated risks. It refunds expensive foreign loans to lower exchange and refinancing risks. The last one is builds a more diversified and resilient debt portfolio. For the third one is availability of a broad and reliable investors base keeps results stable. It supports by pension fund, insurance firms, banks, and foreign investors. It ensures high demand and stable auction results. MGS are among the most liquid instruments in Asia. For the last one is support monetary policy and liquidity management, which is it helps Bank Negara Malaysia in open market operations, enables better control over money supply and interest rate, and enhances monetary policy effectiveness and pricing efficiency.
3.5 is the benefits to the investors for investing in the Malaysian government securities. The first one is low-risk investment. MGS guaranteed that they will give a low-risk investment to the investors. It is free marketable debt instrument issued by the government of Malaysia, sold by competitive auction and facilitated by Bank Negara Malaysia. The second one is tax exemption. MGS gives us some tax exemption. MGS bonds are exempt for withholding tax and have no capital gain tax. The third one is high liquidity. Malaysian government securities are highly liquidity, which means that they can easily bought and sold in the secondary market. The last one is market stability. Malaysian government securities has a market stability. MGS are a long-term bond issued by the government of Malaysia for financing developmental expenditure.
Malaysia government securities, which is MGS, are vital instrument in the country financial system, providing secure long-term funding for national development while offering low-risk investment opportunities. MGS feature fixed coupon rates, bullet repayments, and semi-annual payment, making them attractive to investors. Key market participants such as the Government of Malaysia, Bank Negara Malaysia, principal dealer, institutional and retail investor all play essential roles in issuance, trading and maintaining liquidity. The government MGS help to manage fiscal deficit and diversify funding sources. For investor, MGS offer benefit like tax exemption, high liquidity and stable return. During the preparation of this assignment, we encountered several challenges. One of the main difficult was finding updated and reliable financial information, especially when trying to understand technical terms and complex market processes. Coordinating group members' contribution and aligning our schedule for discussion also required considerable effort. Despite this obstacle, we are proud of the final outcome and grateful for the valuable knowledge and teamwork this assignment has helped us develop.